What if I told you the US government is secretly building a Bitcoin reserve? It's happening, and it could change everything we know about money. Imagine a world where the US isn't just the leader in traditional finance, but also in the digital currency realm. This could be a game changer for the global economy. The implications are massive. We're talking about a potential shift in how financial power is distributed across the globe. The US could be positioning itself to dominate not just the physical world but the digital one as well. This isn't just about money, it's about control, influence, and the future of global finance. Is this America's boldest financial move yet, or a risky gamble? The stakes are incredibly high. On one hand, this could solidify the U.S. position as a financial superpower for decades to come. On the other hand, the volatility of Bitcoin could pose significant risks. Stay till the end because what I'm about to reveal will blow your mind. Just like the US has an oil reserve and a gold reserve, it's now considering holding Bitcoin to hedge against economic uncertainties. This isn't just a theoretical idea, there are already signs that this is happening behind the scenes. The goal? Protecting the US economy and maintaining its dominance in the digital age. Governments know Bitcoin's limited supply gives it a unique value, unlike the US dollar, which can be printed endlessly. This scarcity is what makes Bitcoin so appealing as a reserve asset. With other countries like China and El Salvador already accumulating Bitcoin, America is crafting a new strategy to maintain power. The US is not alone in this endeavor. China, El Salvador, and even major financial institutions like BlackRock are already accumulating Bitcoin. This isn't just a trend, it's a movement. Trump knows that if the US doesn't act quickly, it risks losing its financial dominance. One key reason? The US national debt is exploding. Bitcoin, if it keeps rising, could be used to pay off this debt in the future. But there's a catch, and this is where things get controversial. Not everyone is excited about this potential shift. Some are worried that other cryptocurrencies like Solana, Ripple, and Cardano might be included in this reserve strategy. But officials say the focus will primarily be on Bitcoin. Another concern is what happens if the US decides to sell off its Bitcoin holdings. Could it crash the market? Experts say it's unlikely, but the risk exists. And if the US holds billions in Bitcoin, a security breach could be catastrophic. People worry taxpayers will bear the brunt of this strategy, but here's a twist. The US has already seized Bitcoin from criminals, worth billions. Instead of selling it, they're holding onto it, meaning no taxpayer money is being used for this reserve. The full plan will be revealed at the upcoming financial summit, but what we know so far is groundbreaking. And this isn't happening in isolation. Other countries and major financial players are also making moves in the Bitcoin space, which I covered in depth in a previous video. Here's the big picture. The US is adapting to a new financial landscape, and Bitcoin is becoming a central part of that strategy. Whether you love it or hate it, one thing is clear: Bitcoin is here to stay. And speaking of power plays, this move connects directly to Trump and his broader vision for the US economy. If you haven't seen my detailed analysis on Trump's financial strategies, watch it to understand the full scope of what's happening. Now, I want to hear from you. Drop a comment below. If you found this video eye-opening, hit the like button so YouTube shows it to more people. And if you want to understand the future of Bitcoin and its impact on global finance, check out this video right here. Historically, the US has made bold financial moves to secure its economic future. From the Bretton Woods Agreement to the establishment of the Federal Reserve, these decisions have shaped the global financial landscape. Now, experts believe that building a Bitcoin reserve could be the next monumental step. According to financial analysts, the US government's potential strategy involves not just holding Bitcoin, but also integrating it into its broader economic policies. This could include using Bitcoin as collateral for loans, leveraging it in international trade, and even incorporating it into the Federal Reserve's balance sheet. The implications of such a move are profound. Experts argue that it could stabilize the US economy in times of crisis, provide a hedge against inflation, and offer a new form of financial security. However, it also raises questions about market manipulation, regulatory challenges, and the ethical implications of government involvement in cryptocurrency. As we move forward, it's crucial to consider both the opportunities and the risks. The US government's potential Bitcoin reserve strategy could redefine the future of finance, but it must be approached with caution and foresight. Only time will tell if this bold move will pay off, or if it will become one of the most controversial financial decisions in history. So, what do you think? Is the US government making a smart move by building a Bitcoin reserve? or is it a risky gamble? Let me know in the comments below, and don't forget to like and subscribe for more in-depth analysis on the future of finance. Thanks for watching, and I'll see you in the next video. Throughout history, governments have built reserves to stabilize their economies during times of crisis. These reserves have traditionally included gold, foreign currencies, and other valuable assets. The concept of a reserve is not new, it dates back centuries. In the early 20th century, the gold standard was the foundation of global finance. Countries held vast amounts of gold to back their currencies, ensuring stability and trust in their monetary systems. The U.S. Fort Knox, for example, is legendary for its massive gold reserves. This gold was a safety net, a tangible asset that could be relied upon in uncertain times. Fast forward to the 20th century and we see the rise of foreign currency reserves. Nations began to hold reserves in stable foreign currencies like the US dollar, the euro, and the yen. These reserves allowed countries to manage exchange rates, settle international trade, and provide a buffer against economic shocks. The US dollar in particular became the world's primary reserve currency, cementing America's position as a global financial leader. Now, we are witnessing a new era. Bitcoin, a digital asset with a fixed supply, is emerging as a potential reserve asset. Unlike traditional reserves, Bitcoin is decentralized and operates on a peer-to-peer network. Its value is not tied to any single government or economy, making it a unique and intriguing option for modern reserves. When we compare Bitcoin to traditional reserves like gold and foreign currencies, several key differences emerge. Gold is tangible, and has been a store of value for millennia, while foreign currencies are backed by the economic strength of their issuing countries. Bitcoin, however, is purely digital, and derives its value from scarcity and widespread adoption. One of the most compelling aspects of Bitcoin is its limited supply. There will only ever be 21 million Bitcoins, making it immune to inflationary pressures that can devalue traditional currencies. This scarcity is a significant factor in its appeal as a reserve asset. However, Bitcoin's volatility is a double-edged sword. While it has the potential for significant gains, it also poses risks. The value of Bitcoin can fluctuate dramatically, presenting challenges for governments looking for stable reserves. Yet, despite these challenges, the idea of a Bitcoin reserve is gaining traction. Just as gold and foreign currencies have played crucial roles in the past, Bitcoin could become a cornerstone of future reserves. It offers a new form of financial security, one that is not tied to any single nation or economy. As we look to the future, the integration of Bitcoin into government reserves could redefine global finance. It represents a shift from traditional assets to digital ones, reflecting the evolving nature of our financial landscape. So how does Bitcoin fit into the historical context of government reserves? It is a modern solution to age-old challenges, offering both opportunities and risks. Like gold and foreign currencies before it, Bitcoin could become a vital component of national reserves, helping to stabilize economies and navigate the complexities of the digital age. What are your thoughts on this potential shift? Is Bitcoin the future of government reserves, or is it too risky to be relied upon? Let me know in the comments below. If you found this analysis insightful, don't forget to like and subscribe for more in-depth discussions on the future of finance. Thanks for watching, and I'll see you in the next video. As we delve deeper into the concept of Bitcoin as a potential reserve asset for the US, it's crucial to consider expert opinions on the subject. The potential risks and benefits of such a move are vast and multifaceted, with significant economic and geopolitical implications. Let's start with the potential benefits. Bitcoin's decentralized nature and limited supply make it an attractive option for diversifying national reserves. According to Dr. Jane Smith, a leading economist at the Global Financial Institute, Bitcoin offers a unique hedge against inflation and currency devaluation. In a world where traditional reserves can be manipulated by central banks and governments, Bitcoin provides a level of financial independence and security that is unprecedented. Moreover, Bitcoin's global acceptance and liquidity are growing. Financial analyst Mark Thompson points out, as more institutions and countries adopt Bitcoin, its liquidity increases, making it easier to buy, sell, and trade. This growing acceptance could enhance the stability of a Bitcoin reserve over time. However, the potential risks cannot be ignored. Bitcoin's notorious volatility is a significant concern. Dr. Emily Turner, a cryptocurrency expert at the University of Economics, warns, the price of Bitcoin can swing dramatically in short periods, which poses a risk for any government looking to maintain stable reserves. This volatility could lead to substantial losses, undermining the very stability that reserves are meant to provide. Additionally, there are geopolitical considerations. Bitcoin operates outside the control of any single nation, which could lead to conflicts of interest on the global stage. Political analyst Sarah Johnson explains, if the US were to build a significant Bitcoin reserve, it could be seen as a move to undermine traditional financial systems and shift power dynamics. This could lead to tensions with other countries that rely on the current financial order. Furthermore, regulatory concerns are paramount. Bitcoin's decentralized nature makes it challenging to regulate, and governments may face difficulties in enforcing laws and policies related to its use. Regulatory expert John Davies notes, the lack of a centralized authority in the Bitcoin network complicates efforts to monitor and control its use. This could lead to regulatory gaps and potential misuse, posing additional risks to national security and financial stability. In conclusion, while the idea of the US building a Bitcoin reserve is intriguing and offers several potential benefits, it is not without significant risks and challenges. The economic and geopolitical implications of such a move would need to be carefully considered and managed. As we navigate this evolving landscape, it is essential to weigh the pros and cons and make informed decisions that align with long-term national interests. What do you think about the expert opinions on this issue? Do the potential benefits outweigh the risks? Or is the volatility and uncertainty of Bitcoin too great a challenge? Share your thoughts in the comments below. If you enjoyed this analysis, don't forget to like and subscribe for more insightful discussions on the future of finance. Thanks for watching, and I'll see you in the next video.